Good morning. I'm Peter Milios from the Finance News Network. The Dow Jones Industrial Average jumped for a ninth consecutive day overnight. It was the Dow's best daily winning streak since 2017, but the broader market suffered after post-earnings declines in trader favourites Netflix and Tesla. Shares of Netflix dropped more than 8% after the streaming giant posted revenue that fell short of analyst estimates. Expectations were high into the report, with the stock up nearly 50% on the year. Tesla, meanwhile, tumbled 9.7%. Late Wednesday, CEO Elon Musk and other executives said on the company's earnings call that vehicle production would slow during the third quarter due to shutdowns for factory improvements. On the other end, shares of Dow constitute Johnson & Johnson rose 6% after the drug maker hiked its full-year guidance, along with posting quarterly results that topped Wall Street estimates. Another Dow name, insurer Travelers, beat analyst estimates for revenue in the quarter, boosting the shares. Of the S&P 500 companies that have reported that earnings thus far, 74% have exceeded expectations, FactSet data shows. The strength in corporate earnings have created optimism for a soft landing for the economy. Overall, the 30-stock Dow, which is less dependent on tech stocks, added 0.47%. The S&P 500 slipped 0.68%. The Nasdaq fell 2.05%. The Dow's climb is the widest outperformance by the blue chip indicator over the tech-heavy Nasdaq 100 index since February of last year. And there is some big commodity-related news today. Firstly, the number of oil futures contracts traded hit a low point since January. Gold prices dropped from a 2-month high due to increasing expectations of a Federal Reserve rate hike. If gold falls below 1960, it could trigger more selling towards 1940. China is importing record amounts of oil, taking advantage of cheap Russian crude to build stockpiles and increase exports of refined products. Despite a weak economy, China's oil imports in the first half of 2023 reached a record high of 11.4 million barrels per day, up 11.7% compared to the previous year and 15.3% compared to pre-COVID levels. And the Energy Transitions Commission warns of potential metal shortages in the next decade due to increased demand from the energy transition. Shortages of key minerals like lithium, nickel, graphite, cobalt, neodymium, and copper could raise prices and delay achieving net zero emissions by 2050. The ETC recommends increasing annual capital investment from $45 billion to $70 billion to address supply gaps. Overall, the US sectors finished mostly higher. Utilities was the best performer, whilst consumer discretionary was the worst. The SPY futures are pointing to a 0.1% gain. Thank you for listening.